It seems today's market movement was driven by morning news about changes to Russia's nuclear doctrine. Hence, safe haven assets such as the US dollar, Swiss franc, and to some extent gold are once again in demand. At the same time, rumors began to circulate that China, in retaliation for import tariffs, is actively getting rid of the US Treasury bonds. Due to the looming import tariff hikes ahead of the Donald Trump's inauguration, European exports to the United States are likely to increase. However, this temporary boost will not serve as a fundamental factor strong enough for the Eurozone economy to overtake the United States. As research from the International Monetary Fund has shown, Eurozone GDP is expected to hover around 1.5% in the coming years, while the US economic growth could reach as high as 3%. It's already evident that European companies continue to lag behind their American counterparts. The rapid growth of the US economy and the strong demand for the United States assets remain the main drivers of the US dollar's rally. Its consolidation over the past 24 hours within the range of 106.10 to 106.60 merely reflects profit taken amid significant overbought conditions. Thus, despite the rebound in the euro-dollar pair, fundamentally nothing has changed for it, so the euro showed minor growth. Moreover, the trading dynamics at the start of the week confirmed that the currency traders are betting on further strengthening of the US dollar rather than its European counterpart. This is further reinforced by the growing demand for the safe haven assets today. In essence, the euro-dollar pair experienced a typical correction, trading below the round level of 1.0600. The euro remains under selling pressure, and its outlook for the next 24 hours will depend on the overall market sentiment. At the same time, the euro's oversold condition could lead to another rebound, or at least a consolidation. Technically, this would be possible if the instrument attempts to test resistance levels at 1.0665 and then 1.0730. On the other hand, 1.05 remains the critical level for peers, signaling their readiness for sharp losses in the euro. By the way, today's reports in the Eurozone showed inflation acceleration to 2% a year. However, the data cannot significantly impact trading sentiment in the euro-dollar pair. Notably, just on a Monday, two senior ECB policymakers stated that the new US trade tariffs are far more damaging the Eurozone economy than elevated inflation. At the same time, most economic data points to the malaise in the Eurozone economy, increasing the likelihood of a 50 basis point rate cut by the European Central Bank in December. The markets might hear new details during a speech by ECB President Christine Lagarde tomorrow at the Financial Forum in Germany. Since the start of the new trading week, oil prices have looked in notable rally. For instance, Brent crude is trading today within a daily range of $72.60 to $73.50 per barrel, whereas just a day earlier, the lower point on the chart was around $71.40. The main reason, of course, lies in geopolitics, which has suddenly taken center stage, overshadowing other factors. Yesterday's trading session was the first after US President Joe Biden's statement about American missiles. As a result, the market is now pricing in the risk of potential disruptions to global oil supply chains. Russia, being one of the largest energy suppliers, has a significant portion over its oil and gas infrastructure, potentially at risk of destruction. Hence, crude oil prices are expected to continue their rise. Unlike oil, the Russian currency showed little reaction to Washington's decision. This is because even before the news, the ruble had already lost ground significantly. So the dollar-ruble pair is consolidating around the one-year highs. Of course, the ruble cannot entirely ignore geopolitical factors as they remain a key constraint on its potential for strengthening, and this means that the dollar-ruble pair could extend its climb in the near future. However, any decline is likely to be temporary due to the ruble's oversold condition. Much will depend on the actions of the Russian authorities, though no retaliatory measures have been taken so far. As for economic factors, the Bank of Russia governor stated today that current inflation is expected to slow down. Speaking at the State Duma plenary session, Elvira Nabiulina remarked, "We are now at a turning point." In her view, a shift in the annual inflation rate will confirm that the central bank's monetary policy has finally reached the necessary level of strictness to curb price growth, taking into account all the factors influencing inflation. That's all for today. We monitor developments in the financial markets. Subscribe to our channel and stay up to date with the latest news with us. See you